2 weeks ago, I created a video in which I showcased 3 option plays in preparation for what I believe to be an upcoming downturn in the market due to the expansion of the coronavirus. The 3 options I purchased included a put against Royal Caribbean, a call on the volatility ETF VIXY, and a put against the SPY. In this video, I wanted to give you an overall update on those 3 positions and how my profits and losses look at the moment. Right now, it's Saturday morning, and I can say I've indeed closed all 3 positions. I'm making this video to give you an honest look at my plays and to spur some conversations around my thesis, including why I closed my positions and how I could have done had I kept them open a little longer. First and foremost, let's go over my Royal Caribbean position, aka my biggest regret. Bought around 2 weeks ago, my RCL put cost me $1.25 or $125 total. At the moment of purchase, RCL was trading at $111.50. My put was for a March 20th expiration date and a $95 strike price. It had about a 5% chance of landing in the money, which I believe to be severely undervalued. Since then, Royal Caribbean and the cruise ship industry in general have come under heavy scrutiny following the events that unfolded on the Diamond Princess, a British cruise ship operated by Carnival. This ship operating in Asia was found to have 10 infected passengers on board. It has since been quarantined for more than 2 weeks in the port of Yokohama in Japan, where some reports estimate that as many as 621 of the 3,711 passengers and crew have been infected. This event, along with other similar occurrences such as the MS Westerdam, have cast a negative light on cruise ships, especially those departing from Asia. The cruise ship industry in general has suffered heavily in recent days following an explosion of panic in regards to the coronavirus. For one, cruise ships are essentially giant incubators where thousands of passengers and crew come together for days at a time, sharing the same common spaces, the same food, and most importantly, the same air. This means all it takes is one infected passenger and things head south really quickly. This obvious fact has caused many to cancel reservations and has even pushed companies to cancel routes altogether. On Monday morning of this week, when markets were down nearly 3% due to virus fears, I made the unfortunate decision to sell my RCL option for $287, earning myself a $162 profit. While I can't complain about the great 100% plus return, it was sad to watch RCL stock continue to fall severely following my move. If I had held until the end of the week, I could have sold my option for around $1,900. Regardless, an A-plus play that I hope you guys followed, and it just goes to show how hard it is to hold something when it's already valued at twice the price. My second play was a $12 call on the VIXY, an ETF tracking overall market volatility. With an expiration date of March 20th, this play also resulted in some gains. After buying it for $110, I sold this contract for $480, a nice 436% return. Once again, if I had held it, I would have earned much more, but regardless, I should not have any regrets whenever I make a profitable play. Market volatility has been at levels not seen for years, and until things die down, I'm sure it will continue to spike. Finally, my last play, a $310 put on a SPY expiring March 13th. My biggest mistake without any doubt. Having bought this option for $129 on February 7th with an expiration date of March 20th, I watched as it quickly lost much of its value. After the SPY failed to react to any of the news coming out of China, I really began to believe that it was possible my thesis was incorrect and we would not see a downfall in the SPY related to the virus. Having watched it make some gains on Friday, February 21st, I figured I would reduce my risk and sell some of the positions starting with the SPY. I sold for a 33% loss that afternoon, losing approximately $40. Not wanting to hold it over the weekend, this turned out to be a grave mistake as Monday came around and the SPY was down nearly 3% and my option would have been worth at least $300. Later in the week, it could have sold as high as $1,800. Overall, my option plays went extremely well. Another case of buying the rumor and selling the news. While this bull market seems almost impossible to stop and buying puts has proved costly to many, it's small interruptions like these that allow a quick window of opportunity to make some decent gains. Thank you guys for watching, and please let me know in the comments below if you follow my plays, and if you're looking to sign up for the Robinhood app and begin trading yourself, please consider using my affiliate link in the description below.